Guys, another potential way to play retail may be coming because CNBC now confirming that SheIn, the major online retailer, has filed confidentially to go public. This was first reported by the Wall Street Journal. It could be one of the biggest IPOs in years. The last time SheIn raised money in the private market got a valuation of $66 billion, and that was down by a third from its prior valuation. This is a company that they don't call themselves fast fashion. They like the on-demand fashion. They've totally changed the model and have captivated American consumers. Don't call them a Chinese company. They've been hard at work in Washington trying to convince everyone the manufacturing is done in China. The headquarters is in Singapore, and so is the CEO. The retail market is all over the globe. They don't sell in China, and they have a huge growing market in the U.S. What do you think?
Well, I think it has a lot to not like in that, okay, you can call it, on demand, which is so different than fast fashion. I can't even begin to tell you how different it is. And you could say they're not a Chinese company, but okay, they seem to be. So those are two things right now that are fairly out of favor, right? We've seen with the K-Web, and we've seen Alibaba, for example, just valuations just get cut beyond what any reasonable model should show they should trade at. However, here we are. So this is one that I have to see the numbers, but I can't imagine I'll be gung-ho to jump into this one. I don't know. There's a lot to considering. There's a lot of competition as well. Temu and.
It is one of the most valuable startups, though.
When you think about Baba, we know that model. We got to know it as the Chinese Amazon, right, for all intents and purposes. But if you look on the flip side of that, look at Pinduoduo, the PDD, okay? So a very unique retail model out of China. That stock is raging. I think it's at 52-week high. It's got a $150 billion market cap. They're expected to do $28 billion of sales. But then you look at JD and you look at Baba on the flip side of the models that we know. And I say that, SheIn obviously is a very different model than those. And that's maybe why it will work. I don't know it well enough. I know you and Deirdre both said you guys have been talking about it a lot for the last few months on CNBC, and I've taken a look at it.
Well, there's a reason. It has more than 330 million customers around the globe. I mean, it's really taken people by storm, and I think has revolutionized. They have this secret algorithm where someone orders. It's kind of, they have designers that work on the clothes, but the algorithm helps sort of determine what consumers want based on what they're ordering.
How do you think our regulatory body is going to like secret Chinese algorithms?
It's not a Chinese.
I know, but it is. You know what I mean? Like, I'm just saying, like, who knows? It's going to be messy.
I think that consumers like $5 skirts, and that's really what I think has been revolutionary. And they don't have any inventory, so.
Guy, why are you smirking?
Why are you looking at me?
No,
I'm just smiling because I'm happy.
Sarah's pointing out some important
it's a Monday night. Rangers play tonight. I'll say this quickly before.
Breaking news. We're jumping on it.
Real quick. In terms of fundamentals, I think we've learned the hard way at times in Alibaba. Fundamentals don't matter. A lot of this is basically predicated on how these stocks trade. If the fundamentals mattered in a name like Alibaba, the stock would be, I think, almost twice where it's trading at now. So we can talk about fundamentals all you want, but in terms of these stocks, you have to actually understand how to trade them. And I'll say this quickly. Alibaba at 77, I think, is pretty interesting.